Opendoor is about to make one of its biggest moves yet, expanding nationwide across the entire U.S. Right now, only 50 markets have access, but in just weeks, it could be everywhere. At the same time, short interest is sky high, with over 162 million shares betting against the company. Add in Jerome Powell's upcoming decision on rates, and you've got the perfect storm for massive volatility. Could this be the breakout moment for Opendoor, or the setup for a major crash? Let's break it all down. Hey everyone, welcome back to the channel. Today we're diving into what's happening with Opendoor, the latest updates from their 8K filing, key technical levels, and of course, what to expect from the Fed. There's a lot to cover, so stick around. And if you enjoy this type of content, don't forget to hit that thumbs up and subscribe. It really helps the channel out. So, let's start with where Opendoor is right now. In pre-market trading, the stock dipped about 1.5%. That sounds small, but for a momentum stock like Opendoor, it's worth paying attention to. We saw a double bottom form around 8.45, and since then, the price has been trending up again. That shows buyers are still stepping in at that support zone. Now, the big update is from their latest 8K filing. Opendoor is preparing to launch across the entire continental United States, the lower 48, in the next few weeks. Right now, they're only active in about 50 markets, so this is a massive expansion. What's interesting is how this news came out. The CEO, Cass, has been extremely active on social media, more active in one day than the previous CEO was in weeks. That kind of energy is great for visibility and momentum, but it also creates challenges. Every tweet he puts out has to be reviewed from a legal perspective because if it includes new information, the company needs to make it official. That's why we saw this 8K. It was basically confirming and formalizing what he said online. Personally, I like the energy he's bringing, and clearly the market seems to respond positively to it. But at the same time, I'm sure the legal team at Opendoor is pulling their hair out, trying to keep up. Now let's get into some technical levels. Right now, Opendoor is trading between support around 8.57 cents and resistance at $9.02, followed by 9.31. Those are the levels I'm watching closely. If it can hold above support, there's a good chance we see it retest that $10 range. On the flip side, if Jerome Powell doesn't hint at a rate cut, the stock could fall back closer to 7.20 cents. That's the risk to keep in mind. One factor that makes Opendoor interesting right now is the amount of short interest. Around 24% of the float is shorted, which is roughly 162 million shares. That's a huge number, and when shorts are that aggressive, it sets the stage for volatility. If the stock catches momentum in the right direction, you could see a short squeeze scenario play out, and that could drive the price significantly higher in a short period of time. Now let's talk about Powell and the Fed. Right now, the market is pricing in about a 74% chance of a 25 basis point cut at the October meeting. That would be a major boost for companies like Opendoor, especially since housing is directly tied to interest rates. If Powell hints at more cuts down the line, I think Opendoor could rally hard, maybe even toward new highs. But if he stays neutral or doesn't commit, then expect some sideways action or even a pullback. This is why his comments are so important. The technicals are one thing, but the macro backdrop sets the bigger direction. There's also another dynamic to watch, and that's retail traders. On social media, you're seeing a lot of people bragging about shorting Opendoor. That tells you there's a kind of smear campaign building, trying to push negative sentiment. And now that Robinhood has opened up short selling to retail traders, it's not just retail versus Wall Street anymore. It's retail versus retail. This could make the stock even more volatile because now everyday traders can short just as easily as they can buy. So you might see battles between longs and shorts play out in real time, with both sides trying to move the stock. Looking at options activity, you can also see how divided traders are. Bulls are targeting 10 to 10.50, while bears are aiming for sub $8 levels and even talking about the $6 range. Personally, I think there's more upside potential, but the volatility will be high, so you have to be ready for swings. So here's my take. Opendoor is in a really interesting spot. You've got a big nationwide expansion coming, heavy short interest, a vocal CEO bringing momentum, and a Fed decision right around the corner. That's the recipe for a lot of movement in the stock price. In my opinion, the setup favors upside if Powell confirms that rate cut, but it won't be a straight line. Expect sharp pullbacks and big swings along the way. What do you think? Do you see Opendoor heading back into the $10 soon, or do you think it drops lower before making another move higher? Drop your thoughts down in the comments. I always like to hear what you're watching. That's all for today's update. Thanks for watching. Don't forget to like and subscribe, and I'll catch you in the next one.